Hey, welcome everyone. We are approaching the end of the year, so we really know how tough it is to get some space in your agendas right now. So we truly appreciate the effort for being here with us today. I'm Fernanda Landigrafi. I'm your host for these sessions and also project manager here at PCMI. And before we started, just going through a few guidelines, as usual. So our goal with this coffee chat is just to have a space where we can share, we can discuss, exchange some ideas, bring some new trends. So we really love you to have your cameras open. Also, you can open your mic or use the chat if you feel more comfortable, but we really encourage participation. And second thing is that we publish this material on our YouTube channel. So if you missed something or if you want to review the content, you can also go there and find it. And for today, we have Lindsay Lear as our speaker. As most of you already know, Lindsay. Lindsay is the managing director here at PCMI, and she will take the stage today and lead us in our conversation about payments and e-commerce in Mexico. So Lindsay, thank you very much for joining and being with us today. And the stage is yours.
Hello, thank you, Fernanda. Hi, everyone. Great to be here. I think I missed last month, so it's always great to be back with you guys. And we have a smaller group today, and if there is anyone from Mexico or with specific experience in Mexico, we would love to hear your feedback and impressions. There's a lot going on in Mexico at the moment, on the regulatory side, on the market side. So we are hoping to have a rich discussion. Why are we talking about Mexico today? It's a bit of background. Probably Mexico has received more focus from our clients, probably in the past 12 months than any time since I joined, since I've been studying payments in Latin America. Mexico is truly heating up digital payments in Mexico because of several private sector developments and regulatory developments. As most of you who know Latin America know that Mexico is particularly behind in terms of digital payments compared to Brazil, certainly, and even compared to other markets in the region for its level of influence in the global economy. So we're seeing signs that that's beginning to change. So Mexico is a very big opportunity market at the moment. So, would love to, Ugo, I see you're here. I know you are very focused on Brazil, but have experience in the whole region. So it would be cool to hear, how you're seeing things in Mexico and even some Brazil comparisons would be very interesting. Juan Carlos, I know you are also have a very great view of the whole region, so I'd love to hear from you as well. But anyway, what we're going to do today is dive into PCMI's observations of Mexico, specifically e-commerce and digital payments in generally. As you also may know, we publish our assessment of e-commerce in Latin America every year. We've just finished our update for 2024 and 2025, and so we'll be sharing those results, specific numbers on the market, and then having a general discussion about the development of digital payments, okay? So, and I have a lot of slides, a lot of content, but do jump in at any time with questions and comments, okay? So, Mexico has digital promise, is displaying true digital promise at the moment, even though we're seeing a slowing growth rates in certain areas. So all across the region, we saw e-commerce growth rates soaring above 20% due to the pandemic and other factors. That growth is starting to subside a little bit, but we still see, 15% annual growth projected in Mexico e-commerce for the next several years. And this is taking place despite turbulence in the Mexican economy, stagnated consumer growth, mild recession forecasts, restrictions on cross-border e-commerce due to new taxes and regulation. What this is really showing us is that despite headwinds, Mexico still has a lot of runway to grow, right? So we're projecting 15% annual growth through the next several years. And where we can putting this into a little bit of context is that when we look at Mexico mapped on the region, this graph is very interesting, takes a moment to fully grasp. But across the horizontal axis here, we see e-commerce as a penetration of GDP. So how big is e-commerce, the size of e-commerce relative to the general economy? And you can see Brazil all the way out here to the right. Okay, Mexico's here kind of near Argentina, Costa Rica, Peru, right? Um, Across the vertical axis is e-commerce penetration of adults. So what percent of the population has ever used e-commerce, even if it's just once a year for a Netflix subscription? And so the kind of trend is that around the region, we have fairly high penetration of the population. More than 80% of adults have bought something online or digitally at some point in the last year. However, that doesn't really speak to their concentration or uh, consolidation of the habit of e-commerce. So that's where the majority of markets are, high penetration of the population, but kind of low penetration as a percent of total expenditure. So that's where Mexico is. We've got Colombia and Chile and Brazil out here more towards the right, demonstrating higher concentrations of e-commerce. And really what we're seeing here is that for all of these markets, even though large swaths of the population are using digital payments, but for not that much share of their total expenditure. So that's where the growth is going to come from. People spending more online, taking away from physical channels. Okay. Okay. Yeah. All right. Looking at, you guys know that we really always focus on payment methods. And this is something that's really, really fascinating in Mexico and in the region. Okay. So if we look down here at the bottom, these in the dotted lines here represent alternative payment methods. Okay. So of course we see Brazil way out here with Pix being extremely dominant, over 40% in e-commerce of e-commerce in Brazil. And as a share of the region, Pix is just a massive share of volume. In Mexico, what we can see is that cards are still dominant, okay? But alternative payment methods representing about 20 to 30% of the entire market. With that share maintaining, not really growing significantly. So cards are projected to maintain steady in Mexico. We are seeing important growth from certain payment methods, but as a relative share of overall spend, credit and debit are projected to maintain their share with some slight variations, but nothing like what has happened in other markets. Colombia is another one that's not shown here, but we know APMs are growing globally. They're growing very aggressively in Latin America. In Mexico, still a card-led market. Okay, and we can see that in Mexico, cards are still representing 69% of the share by 2027.
Think this is
Casey.
sorry for jumping in. This is a really
Yeah, please
interesting one.
do.
You're
Mhm.
absolutely Pix in Brazil is phenomenal and is direct a competition to debit cards, but not for credit cards because credit cards have purchase guarantees on them. And this is very clear that that's what's happened in Brazil. And so it doesn't surprise me in the slightest. I know that previous conversations we've talked about other countries looking at Pix and copying them. And doing their own version of Pix is a great idea. But they were talking about can Pix be also used in other countries? And that's a real security and transaction flow issue.
Mhm.
Copying the Pix model is great, but having Pix with multiple currencies is a big problem. But I'm liking that Brazil is leading and showing how well it's worked um, is is an example for everyone else. So it's like, is Mexico? So I was getting to is Mexico looking at the PIX model to adopt for themselves?
So great question. Brazil is certainly leading and putting pressure on other countries in the region. I'll get to that, Nick. I think I have a slide coming up about that, where I'll address that specifically. Okay. Um, so going into a look here, in Mexico, credit cards are still driving the market and still driving growth of the market. So, we have credit cards still growing at about 18% up to 2027, which is pretty decent, right? For the most mature payment method, that's a pretty decent growth rate. It is noteworthy. Debit has declined. Mexico has always been a very debit forward market in e-commerce as opposed to other markets in the region. This growth is slowing down a little bit. Still a respectable growth rate, but pretty impressive that credit cards are driving this more than debit. But even more noteworthy is that the fastest growing payment methods are SPAY, which is the RTGS of Mexico, the real-time payment system in Mexico. Not the same as PIX, but it is the real-time bank transfer infrastructure that is becoming adopted more and more for retail payments, and I'll go into that more in detail. Also, buy now, pay later has a impressive adoption. I would say Mexico is the leader for BNPL adoption in the region. And while BNPL seems to be slowing down in other parts of the world or stagnating, still surging ahead. And this is impressive since Latin America has had for decades its own buy now, pay later in the form of interest-free credit card installments. But this form of a buy now, pay later, in which you have specific apps offering this, is actually experiencing a decent amount of success. Okay. Great. So that's just an overview, a quick overview of payment methods for e-commerce. Also notable is cash and wallets. Wallets is really Mercado Pago and PayPal are leading the market, and keeping pace with overall growth, but not necessarily leading the market in terms of growth, not a massive growth driver. Cash in terms of OXXO Pay, 7-Eleven, PayNet, and also cash on delivery continue to be interesting, but growth again is not keeping pace with the overall market. So it's losing share year over year. Okay. Okay, so let's go into understanding Mexico a little bit more at the infrastructure level and why overall is Mexico still considered a cash-first economy. This is now zooming out from e-commerce to a wider lens of the economy overall. And this is where we get into some of those structural questions, and we'll discuss PIX and SPAY in this section. Okay. So cash is overall considered, and anyone who has lived in Mexico or is from Mexico can attest to this. Cash continues to be a lifestyle in Mexico. According to our assessment, 69% of transactions and consumer spending are made in cash, and this is comparative to other markets in the region. So Peru, comparable to Peru and Colombia. Brazil and Chile, look how dramatic this decline of cash has been. If you talk to any Brazilian, even in the last year, I've really heard Brazilians over and over say that cash is really disappearing in Brazil since the acceleration of PIX and digital payments in general. Cash is increasingly difficult to find, mostly used in rural areas outside of the big cities. But this is not the case in Mexico. We still have massive uses of cash, and you can see by payment method how this is looking. Cash versus cards versus SPAY. Now, cash is declining. We do forecast this declining trend, but is still, even by 2027, more than half of transactions. And so anyone who, Annabelle, I know, you every time we do this analysis, and I say, Anna, does this resonate with your life in Mexico? Is this truly a good reflection? The answer is yes. Cash is still very, very dominant. Yes, Juan Carlos, go ahead.
Yes, the comment I think is timely is the correlation with the informality of the economy. And when you look at Mexico and Colombia and Peru, I think that if you correlate the level of informality and the economy, that is a big explanation for the still very attached to the cash, and still, despite that people has been getting more bankarized, still the operational methodology or how they operate day to day, despite that maybe they have an account, is really cash, but for different reasons that are really underlying under the informality of the economy. No, there's different things, there's taxes, there's different elements around how the people behave and how the economy operates. No, I just wanted to
100%. Yeah.
highlight. Yeah.
General mentality there. And here we'll look at a little bit of these structural issues. Comparing, benchmarking Mexico and Brazil, right? So right off the bat, we have high bank account ownership in Brazil versus Mexico, right? A huge gap here. So right off the bat, that helps explain. We've got a structural difference in terms of how these economies and payments landscapes are built. Card network interoperability began in 2010 in Brazil. In Mexico, we only have partial interoperability, which really goes down to the card processing and clearinghouse level. We'll get into that a little bit more. Of course, the launch of Pix in 2020 completely transformed Brazil. We have very efficient real-time payments in Mexico, but they're not built. There have been failed attempts from the central bank and really no layer on top of that, of top of SPAY, to bring real-time payments to the consumer in a user-friendly way that has helped it to scale, right? So from a structural level. Regulatory level, right? In Brazil, it's far easier to become a payment institution. This is why we have such a rich fintech environment in Brazil, going back for more than a decade now. In Mexico, we had the Ley Fintech, which was very momentous when it was passed, but it has actually put a lot of barriers in the path for fintechs to actually capture deposits and operate like a bank might. This has been an ongoing controversial topic, and actually, many fintechs have discovered it's the path to capturing deposits. It's actually faster to buy a bank than it is to become a licensed fintech, which is a little bit counterintuitive and a little bit against the spirit of the law. So those regulatory barriers have also been present in Mexico. And then finally, cultural.
Lynn, can I just jump here and make a comment?
Yes.
Yeah, it's just because I think this regulatory part is really important, especially for PIX, because these payment institutions, like the Central Bank of Brazil, it enables the payment institutions 4 years before PIX were launched. So, and that was the mark where a lot of people start to get access to digital payments, like digital wallets, digital banks. So when PIX came, a lot of people already had access to some digital type of payments. So that regulatory environment is also key to understand the success of PIX. So I just wanted to highlight that.
Absolutely. Absolutely. Yeah, for a long time, this fintech culture has been building for a long time in Brazil, which has really gone a long way to transform the ecosystem. And then finally, this cultural element, which is what you spoke to, Juan Carlos, is very much based on the informal economy. Now, these numbers here are some numbers of the size of the percent of employed in the informal sector, and you see the differences between Brazil and Mexico. I think that the difference is even bigger than these numbers might show us. It's very difficult to truly size and understand the impact and the relevance of the informal sector. But exactly what you spoke to, Juan Carlos, and it's this cultural. It's a mindset. It's also how the economy operates. And in Brazil, cash has become an option. It's maybe related to convenience in certain circumstances, but formality has become much more accepted and modus operandi. Where in Mexico, informality continues to be the standard. So, yeah, go ahead and jump in, Juan.
There are two other elements that create. Sorry, can you hear me?
Yes.
Can you hear me?
Yes, we
Yeah.
can.
There are two other elements here in terms of the infrastructure, the structure of the financial sector, as well as the level of leadership of the central bank, because despite of the central bank in Mexico was a little bit ahead in terms of instant payments from long time ago, then it was stagnant in the way how they continue developing payment systems in some way, in terms of integrality, like compared with PIX. The other point is the structure. In Mexico, you have a big oligopoly of foreign banks in some way. And in Brazil, you have a different combination of major local financial institutions, much more diverse, and with the what was mentioned about the and a different environment already developed, more developed for like neobanks and wallets and things like that. So those other two elements are also big influences in the level of leadership to an evolution that can lead to a more um, beneficial framework for fintech development and things like that. It's not a surprise that in Mexico has been more complicated because those two elements.
Yeah.
That's it.
Great points. I think the leadership one is very important. Um, I believe that the Central Bank of Brazil is possibly the most successful institution globally in terms of rolling out of its level of leadership and vision, leadership, and influence. There's no other institution, private or public, that has accomplished what they have and continue to do so. So I would totally agree with that assessment. And this speaks a little bit to the diversification of banks. The acquiring landscape in Mexico continues to be extremely concentrated. Now, even though Mexico has had this wonderful diversification in terms of agregadores in the past 10 years, we know that Clip, Mercado Pago, others have been very successful. However, when you look at the data, it's quite interesting. We still have almost 70% of small businesses that do not accept cards. And so we have a massive gap in acceptance. And when you look at what's really kind of shocking is when you look at this is central bank data, but when you look at the number of POS terminals by acquirers versus aggregators, you see that the aggregators, the fintechs, have, come a really long way. 2/3 of POS terminals in the market are provided by aggregators, right? By Clip, Mercado Pago, these e-commerce guys. So that's, potentially an amazing success story. But when you look at the volumes, it completely flips, and it's quite mind-boggling. 94% of card volume is captured by traditional acquirers, even though they only have about 30% of POSs in the market. So this just goes to show that the vast majority of card volume is still concentrated amongst large retailers served by traditional acquirers, and the SMB ecosystem has not truly been activated, right? And probably any of you who are in Mexico go to the store, the POS either doesn't work, they can't find it, it doesn't work. Oh, I'll give you a discount if you pay in cash, or I'll surcharge you if you pay with card. I really want you to pay me with cash. That SMB environment hasn't really been totally compelled and convinced about the value of digital payments. Okay. And speaking a little bit to your question, Nick, about PIX in Mexico, the central bank has made 2 attempts to implement a PIX-like scheme. There are very important differences that have contributed to them not quite scaling or working. And on the left, you can see personal consumption. This is expenditure by consumers with cards and SPAY and general, bank transfers, via your online bank versus CODI y DIMO, which are the attempts by the central bank to replicate PIX. And even the vertical axes are using 2 different scales. Even though the bars don't look that different in size, notice that the scale is different. Just showing how absolutely insignificant these volumes are of CODI and DIMO. Now, there's a lot of reasons why these haven't worked. We won't go into that in detail now. But some of the major contributing factors, no mandatory adoption, whereas in Brazil, it was mandated by the central bank that banks have to use these. No economics built in, meaning there's no incentives for banks or acquirers to promote COLI or demo. So there's just adding to the richness around why we haven't seen scaled P2P, scaled instant payments in Mexico. Okay. However, well, actually, oh, that's in the next section. Okay. And then a final component that goes to explaining a little bit of the cash dominant infrastructure in Mexico is the card, the setup of the card processing and the clearinghouse landscape in Mexico really dominated by two entities which are owned by the major banks. And you can see the market share of card transactions by Prosa and eGlobal. Now MasterCard, this is once again data published by the regulators. They received approval to begin switching transactions a couple of years ago, started off very slow and have been gaining share. And this is a very exciting and interesting development. But still, there's this very kind of gridlock situation between processors who are owned by banks, which creates barriers to entry. It creates low levels of competition, delayed technology adoption. We have low contactless penetration. We have difficulty, old monolithic infrastructure, lack of APIs, difficulty with digital onboarding, high fraud. This duopoly and lack of competition has contributed to a lot of the ills when it comes to processing digital payments in the region, in the market. Okay. However, what we think is very exciting right now is a couple of changes that signal maybe this things are about to change, or at least change is accelerating in the region. So it's a market to be looking at. Okay. So why is this the case? Going back to this question of instant payments, SPAY. SPAY, we believe when you look at the data, even though the volume is still small, when you look at the data and the growth of SPAY, it's actually indicative that there's a change occurring in Mexico. So we have SPAY is the interbank real-time payment network and is primarily used for massive intra-institutional transactions, millions of dollars transactions. It's also used very heavily by businesses, massive use of B2B payments and high ticket transactions. However, when you look at the transactions that are considered low value or around $600 or less, the growth is actually really impressive at 30% compared to 17% for cards during this time period. So low value SPAY transactions, excuse me, that signifies SPAY being used by individuals and by micro businesses, anything less than $600, growing 30%, double the rate of cards. All right. And when we speak to e-commerce merchants, a comment we hear consistently is that SPAY is their fastest growing payment method. And when we looked at the data at the beginning of the presentation, we saw that SPAY was growing at 20%. SPAY for e-commerce. SPAY as a purchase method on e-commerce websites was growing at 20%, even higher than cards. So anyone want to, Anna, you want to tell us, if you're, when have you been asked or when have you seen SPAY being offered as a payment method in your day-to-day?
Yeah. And I just wanted to share with everybody, Lindsay, this experience that I am seeing in Mexico and going a little bit beyond e-commerce, seeing the use of SPAY among even informal merchants. I don't know, someone selling you something in the street, and they are now offering the possibility of being able to transfer them via SPAY, or someone that is even asking for money, to donate money to them, and they are offering the possibility, transfer me via SPAY. So it's going beyond e-commerce, it's going beyond the formal market, and now going into the informal market through people's personal accounts. So yeah.
And tell us a little bit about the typical Mexican person's psychology around security, SPAY versus a card transaction.
Yeah, and I think I will link it with security and with the rates of cards, right? So yes, people in informal markets probably they don't want to pay the interchange rates that cards are charging, and that's why they are going towards pay. And also there is this security element, this fraud element that is happening in Mexico. You know, it's so easy for people to just clone or do a fraud with a card. And I think that is one of the elements that is influencing the growth of SPAY. I've seen people having accidents with their cards, you know, that they use them in informal options and getting their cards cloned. So yeah, that is one of the reasons that cards are not growing as fast as Pay is, because Pay is so secure and it's just such an easy option to use. So that's why it's growing.
Perfect.
Can I also add one thing here that I'm seeing is that, like Anna said, if you have like a shop, for example, and you have like some workers that you need to pay, even that the work is not like formal work, it's like it's in informality. Like now, what we are seeing, it's a lot of people being paid with Pay, because you don't need to say like, oh, this is like a payment that I'm doing for an employee. So you just do like a payout or a bank transfer, because people are quite insecure about cash. So we are having like Pay also like account to account for payments in informal business in that sense.
Question from Hugo. So will SPAY end up killing Cody? Um, you know, the strange thing is, you know, Cody is based on SPAY. So all Cody transactions are ultimately SPAY transactions. However, your question is a good one. I mean, I think that I don't know what the central bank's plans with Cody are, but it's clear that consumers understand SPAY more than they do Cody, and businesses understand SPAY more than they do Cody. So there's just faster organic adoption of a basic SPAY transaction versus Cody. So I don't know if anyone else has another opinion. And I think I saw Eric join. Oh yeah, there he is chiming in on chat. Eric, I'd love to hear your thoughts on this if you could share anything.
Yeah, thank you, Lindsay.
Eric.
Didn't know if I can jump in. I mean, my day-to-day is to handle this two type of payments, that is Cody and SPAY into IDA solution. And the main thing is that SPAY hasn't reached the credit facilities that a credit card also delivers, for not just for the customer, but also for the merchant. We cannot see installments within SPAY. We cannot see like rewards points or loyalty systems within SPAY, something that we can see in Peaks. And also, regarding to Cody, just to finish this comment, Cody is on purpose, I don't know how to say it, but not promoted by the banks and for the acquiring system, because they don't have any incentives. And when I mean incentives, they don't have like a way to charge for Cody. So in the case of SPAY, they do actually, even it is not like something very common, but they do, and they get like something in return to enable SPAY and all the stuff. But within Cody, they don't have any incentive in order to deliver a better solution of Cody. So it's about to die. It's a fact, Cody in Mexico, and SPAY is gonna be like the base to another kind of payment thing. Demo is also about to die. So it's kind of the thing is that happening here in Mexico.
Perfect. Amazing. So yeah, that's our we think that's very interesting in this revolution of instant payments that's happening all over the globe. This is the Mexican flavor of it. And to your point, Eric, you know, what we may see are fintechs building on top of SPAY to improve the user experience, maybe credit facilities eventually being attached to SPAY. You know, STP and Arcus are gateways to SPAY that are helping connect fintechs and other players to SPAY. So I believe that, you know, the blueprint is there. It's just that the technology and the user experience hasn't been built on top of it yet. So that potentially we might see accelerate in the next couple of years, right? But we also have something very interesting happening in the card industry, which is, you know, another reason that we see Mexico maybe being at an inflection point. And I want to invite Lautaro to present the next couple of slides. And again, Eric, whoever, I believe Raul, I'd love to hear your guys. I know that these regulatory issues that the CNBV and Mexico are discussing at the moment could have a big impact. So I'll let Lautaro kind of present the next couple slides, and then we can discuss.
Yeah. All right. Thank you, Lynn. Hi, everyone. So before I start off, just have a question for the audience. Do you think that the average MDR charged in Mexico is high compared to your own market or, you know, your own experience? I just want to see what the feedback from you guys is. So roughly in 2016, it was 2 and a bit percent for credit and 1.65% for debit. Is it high? Is it low? What's your take?
Average. It's pretty much the same as more or less in Brazil, depending on the retailers. But yeah.
Yeah. Yeah, no, it makes sense, and it's a weighted average, you know, depending on merchant and risk. So Raul is saying he thinks they're high. Yes.
Yeah.
Yes. Do you want to elaborate a bit more, Raul, before we go to the next slide?
Sure. Well, I think that there has been recently a proposal for an amendment in the change for the MDR rates, and it is being very debatable because for IFPEs, which are the regulated wallets, it is basically one of the most important source of revenue, if not the only one. And what it's been said, and Lindsay has already mentioned it, is that what it's been said is that the banks are winning the battle because the law is being pushed with the lobbying from the banks. So in the end, we don't know what will happen. Of course, if the rates are lowered, it will be beneficial for consumers, but certainly it will be like challenging for the acquirers, the fintechs, the IFPEs. So we will see what will happen.
No, that's great, Raul. You've spoiled the next 3 slides, but
Okay.
if we move on, Lynn, yeah.
Sorry.
Right. No worries, Raul. That's great. Yeah, so 3 weeks ago, Banxico and CNBV launched a public consultation on new rules for payments, for payment card networks. We're not really sure what sparked the conversation. Maybe a political analyst could say it's a government thing, you know, stamping their authority. But basically, what really caught the eye is on the left, it's the cap to the interchange fees, right? So in this public consultation, they don't really mention anything about MDR fees. They're just proposing to cut debit card fees from 0.45 to 0.3, and credit cards a huge cut from 1.35 to 0.6. And as I was saying, you know, interchange represents a large chunk of profits, especially for the smaller fintechs that have been the ones really pushing issuing in Mexico. But as we were discussing with Lynn, it's not really about the MDR. It's about this push for digitization. And I think if we move Lynn to the next slide, then we can come back to this one. But really, what Banxico is saying, it's, you know, we've got a very, you know, turbio is a word in Spanish, in Argentine Spanish, like a very dark sort of credit card processing market. You know, we don't really know what the real cost is. You know, the fees are too high, and if the fees are too high, you know, that goes against formalizing transactions. Then, you know, the natural answer from the private sector is, you know, we are the ones doing the issuing. it's your fault as a government, charging very high taxes, that incentivize informality. So really, you shouldn't be punishing us. You should be doing more to fight cash. So I guess my question here for Eric, for Raul, for anyone with experience in Mexico, it's a chicken or egg situation. How do you see it? Does Banxico need to come in and regulate in order to, push for lower MDRs and then more formalization? It should be the other way around. Should you, be lowering the barriers to entry for merchants, and that would, get the market into sort of positive reinforcement cycles. What's your view?
Well, I can go first. Hope there's no one from the CMBB in the call, but the industry is very nervous. Actually, a lot of players, incumbents, are very worried about this, especially the clearing houses and the acquirers, non-bank acquirers, because I mean, it was a tough model to support even with these high rates, because they are actually high, even though I mean, this is kind of a good intention, I may think, but in Mexico, the cost and the card payment network is so full of different participants that is like a highly cost model to sustain. And for the issuing side, there's a lot of fintechs, especially IFPEs that you already mentioned, that they just have this revenue stream as a way to sustain their model. So probably they will, even if not pivot, they will die.
I mean, that cut is really significant on credit cards. I don't know if, I mean, debit, globally it's pretty standard now to have a debit card cap, but credit card, I mean, that is really, really drastic. So
Yeah, and sorry, Lynn, if we go back to that slide, and thank you, Eric, for your input. It's not just the interchange fees. It's about the market structure as well. So as you mentioned, interoperability, just being very transparent when it comes to pricing, which I think that's a very good move, and it goes in line, I guess, with the best practices around the world. If you look at the European Union, they're already doing this. But I think if we move forward a slide, I think the real question is, if MDR really falls, do we really think that merchants are going to go running down to the closest acquirer and say, yes, give me a POS device and let's start doing payments the right way? I know fair that in Brazil, actually Pix ended up being like a sort of positive reinforcement to digital payments as a whole, to cards. So if you started using Pix, you just became more digitized as a merchant and as a consumer. So yeah, I think that's the big question. Is it worth seeing reduced issuing to encourage merchants to take payments? I think I don't have an answer. Maybe Anna can give us a bit of a on the ground view, but it's a tough one.
See Eric like nodding, or
Yeah, just sorry about it, but there's something that, I mean, this is something that I've been living in the past few years. It is not about the MDR. It's about the tax policies to make merchants to get into this digital payment wave. Even though this is, as I mentioned, a good intention, I don't know, like a good willing from the regulator. The thing is not about the MDR. I mean, we have already 1,000 micro businesses into IDA, and the most tough, I don't know, like barrier into getting them to digital payments are taxes, nor MDRs.
Very, very powerful question, Lau. Are these MDRs really going to make the difference? Or, because that's the mentality that they're operating under, right? Now I have a question, what are this, we have this space right now that we're discussing these things. So for Eric and Raul and others, what are the spaces to engage regulators? I mean, are people telling them, hey, you all, we need to really look at the tax structure and the incentives to formalize versus informalize. Is that conversation taking place to your knowledge?
Well, at some point, yes, Lindsay, but maybe I think that as a background, this proposal for the amendment in the regulation comes from a competence study from the federal regulator that it was done a couple of years ago, maybe 4 or 5 years, where they were mentioning that these kind of fees were a barrier for the adoption of electronic payments. So this is in regard to Lautaro's questions, but I think that from my point of view, this will not like leverage the use of digital payments because Eric was mentioning taxes, but it is also have to do with the financial education of people that they feel that cash is more reliable to use. And actually, in Mexico, there are some other changes that are ongoing regarding SPAY payments. For example, the banks are now setting caps to the SPAY transfers that you are making in regards to AML controls. And of course, you can like define your own caps, but this represents a barrier. It is not maybe like this seamless user experience as before. And also, there is a new regulation that according to a certain amount of cash deposits that you are doing in the bank, you have to identify yourself and like comply with other controls. So in the end, this is creating some kind of barriers, and there is no incentives from the government to use digital payments. So I'm not sure that this will leverage digital payments. And there are some conversations ongoing regarding customers, but I think that this is also needs to be strengthened with financial education programs and also how to approach the user to send the message that digital payments are like there are confidence in digital payments and it is safe to use them. But I think that these elements are not basically seen by the regulators, no?
That's very interesting, Raul. What you mentioned about SPAY and AML and cash deposits. Do you see, is that in part a reaction to, I know the president has recently, declared war on drug cartels and, more pressure from Trump to combat that more aggressively. Is that part in response to
Yeah.
that?
Yes.
Yeah, it is in response to that because the Minister of Finance and the CNBV, which is a financial regulator, are like having these lines of actions to respond to Trump's actions regarding fighting and combat to AML. So yeah, it is directly linked to that. In my personal experience, what I have also seen is that some institutions are like restraining transfers from pesos to dollars. I have not been able to send like dollars as before because I have to comply with several other elements or call the bank like in the traditional way. But this is basically in response to that, no?
Interesting. So are you saying it's getting more difficult to buy dollars or do foreign exchange or send money
Yeah,
to the country?
exactly. Yeah.
Interesting.
Yeah.
Very, very. So this is, I think, an actively changing and ongoing issue. Lau, I don't know if you in your research or if anyone knows. So we have an open consultation going on right now, but what's the next step in this process?
Yeah, I'm not sure, Lynn. They published the consultation like 3 weeks ago. They opened up a sort of mini website where people in the industry can, post their opinion online. But yeah, I'm not sure exactly about the next steps. I mean, it could be just a very big sort of political move, to assert power. We don't really know. So yeah, that's
Okay.
the
We'll
current
see something
situation.
certainly to monitor and probably likely next year we might see some actual action here. Interesting. Cool. So just continuing on here, to your point, Raul, about interchange, right? So and interchange being a really important revenue driver for fintechs. Card issuing. So we've seen, card issuing is still really concentrated among the leading players in terms of the number of cards issued, but we see several fintechs really driving issuing as well in recent years. I mean, Nubank with 10 million cards issued, which is rivaling Banco Azteca at this point. And we have others who have a decent card portfolio at this point. Now, for Klar and Story and even Nubank, these guys are light banks, right? They have accounts, they have cards. If you cap interchange, especially Nubank with 10 million credit cards, I'm sorry, cards, but credit card is what they've really pushed. That limits their ability to earn revenue because they're not big into lending. They don't have major other sources of revenue. So could potentially drive these guys out of the market and further concentrate the business among the leaders. So that's a great point. Another element to this competitive discussion and interoperability is the card processing. I showed that market share graph earlier. This is starting to change, mostly with the push from MasterCard with their own clearinghouse, bringing in global best practices, bringing in API-based infrastructure, bringing in service bundling, competing with Prosa and Global. From when we talk to the market, there's still issues with interoperability with local Mexican messaging compared to global messaging and things like that. So this is certainly not a silver bullet, but we're seeing a little bit of opening up and flexibility in card processing, and it seems like those regulations that are proposed would speed this process. Okay. I'm going to kind of go through this section quickly in our last 5 minutes, just returning back to e-commerce so we can deep dive a little bit into industries and verticals. This is a really interesting view. What it does is breaks down e-commerce in Mexico by vertical, and you can see that retail is really significant, 59%. It's also one of the fastest growing verticals. So that's kind of doesn't happen very often where the largest volume chunk of the market is also growing the fastest. That just speaks to how underpenetrated and still underdeveloped the market is. And Raul, you spoke about, antitrust and competition issues. This has also been flagged in e-commerce by the antitrust organizations, stating that, Amazon and Mercado Libre dominate 80% of online retail. So there's been some viewing of this and potential moves to break this up, but really shows that there's opportunity to break up that dominance in the market. We've seen the entrance of Asian competitors, but mostly in low ticket sizes, not commanding a huge chunk of the market yet. So retail is really where there's big opportunity to create more diversification. But we see streaming still growing very rapidly, gaming and other digital services growing as well. So lots of opportunity, industry-wise. A couple of important, back to the regulatory impact, recently, or just this year, impact in terms of taxes on imports, really impacting cross-border e-commerce, Amazon, as well as Chinese platforms, AliExpress, Shein, and Temu. Now, this has happened across the region to varying extents. Even in Brazil, what we've seen is these taxes don't always have the effect that they're intended to have, meaning usually a lot of items found on the global market are so significantly cheaper that even with a 33% tax, consumers are still willing to buy them, especially as delivery logistics have improved. So if I have to wait 30 days and I have to pay 33%, the product may not be as interesting to me. But if I can get the product in a week, I may be willing, if that product is not available locally or the price difference is so significant. So we'll see how this impacts cross-border e-commerce, but what we anticipate is we still anticipate cross-border growing at a slightly faster rate than domestic. This is a trend that has taken place around Latin America, just due to the growing diversity of products found globally, increasing awareness of those products, and the growth of the PSPs that facilitate those transactions into Mexico. Okay. And then just a couple, I want to make sure I get, yeah. So I'll kind of make this my final slide today, but a couple of other trends just to keep in mind. We have kind of trends related to cards and trends related to emerging payments and emerging elements of the market. Mobile commerce has completely dominated Latin America and Mexico. So 75% of e-commerce volume is taking place on a mobile device, really speaking to the importance of the user experience journey and payment method experience. 25% of e-commerce is purchased using installments. We know that this is very important in Mexico. We have a number there to put that into perspective. And very interesting, this is published by AMVO. PayPal continues to have a very strong brand and being very relevant in the market. The number one payment method among women, that probably speaks to its brand recognition around security. We know how important security is in Mexico culturally, and so branding and features around security continue to be really important. What else is driving the market? Social commerce, meaning journeys that travel through social media, Instagram, things like that are driving growth. Payments with SPAY driving growth, and again, that buy now, pay later element really being important drivers that are, still niche, but continuing to consolidate. Okay. And then I'm just going to jump here to kind of our big takeaways. Buy now, pay later being the fastest online growing payment method, especially among young people, right? So thinking about what innovative credit, how important that is, whether it's a buy now, pay later app or whether it's some other kind of, new pay. Will new pay launch in Mexico? That could be a very interesting development. But this is an important thing to be aware of. Capturing transactions from digital first issuers and their enablers will be really important as we're breaking open the card infrastructure in Mexico. That's promoting the growth of more digital first issuers and fintechs who will be actively capturing transactions both online and offline. So from a payment method and a payment infrastructure opportunity, we'll see more digital first players operating in Mexico. And again, breaking open this duopoly between Amazon and Mercado Libre, diversifying retail and helping local retailers get up to speed technology-wise is another big opportunity. And then expanding beyond retail into SaaS, into B2B, into mobility and gaming. These are all under leveraged growth pockets that the numbers point to. Looking at, as we're kind of experiencing economic recession and stagnation, focusing on basic goods as opposed to luxury items, and an APM strategy for those verticals could be a strategic move. Yeah, that's it. I thought I had one more slide. So these last opportunities really focus on e-commerce specifically, but as we've seen throughout the presentation, digital payments in general are undergoing a transformation. So we're excited to see what you guys, all the operators and practitioners on the call, are going to do in Mexico, and we'll definitely revisit this next year. Raul, I know you're very involved and very connected to the regulatory aspects, so we may call upon you for your insight later in the year or early next year as we can see how this is developing. Okay.
Sure. Count on it, Lindsay. Glad to help.
So thank you everyone very much. Thank you team for putting this together. Our last coffee chat of the year is taking place on December 17th. We will be covering Breve in Colombia, which is a very exciting, important development. The Pix version of Colombia has launched and is making waves in Colombia. So we'll be hearing from eBanks. And diving in Valentina on the PCMI team to dive into this very exciting wave of transformation. So please make sure to join us. Thank you everyone for being here. Have a great rest of your week, and we will talk very soon.